So welcome back to another week of trading the 5K account. This week I had 2 losses and 1 win. Luckily for me, that one winning trade actually recovered those 2 losses. As a matter of fact, that one win trade we have recovered 7 losses, which is the 7 losses in a row. But something happened and I'm going to be sharing everything with you guys on the charts. Before I move on to the charts, I remember making a video here on YouTube that I started trading in March 2023. But I remember vividly that I did not start trading until after my birthday, and my birthday is in April. And the first video I uploaded here on this YouTube where I say I'm going to be starting forex trading, I uploaded that video in July 2023. So I actually started trading in May 2023, not March 2023. So with that said, and this month being May 1st, I'm going to say this is my 2 years now. It's going to make up as my 2 years in the financial markets, because I do not actually know the exact date I started trading in May. So with that said, let's get into the analysis. Let me share everything with you guys that I've learned from this week and the weekly analysis and everything about the charts this week. The first trade was a gold buy position. The same thing, the structural liquidity. We have an order block here, the inducements. The market actually breaking structure around this level. Market change character around this level, and then giving us this first pullback and then going up. So my expectation solely was for the market to come and tap into this unmitigated order block before pushing to the upside. But unfortunately, market did not actually respected that order block. Market came down here and then took this order block and then moved to the upside. So that was the first trade for the week, a gold buy position. So let me move over quickly to the second trade for the week. Now the second trade for the week was very similar. We have the break of structure, obviously. We have a break of structure around this zone, right? And we have our order block around this zone. And now we have our inducements around this level. And now the way you get to pick the order block is that you need to pick the order block or the support or resistance. Any of your entry level has to be the one closest to the inducement. That is the one you need to pick. So the reason why I did not pick these other blocks is because this one is actually close to the inducement. And if I go over to the higher time frame, like the 1 hour or 4 hour time frame, let's actually check the 1 hour time frame. Now in the 1 hour time frame, you can see that this is clearly a support level. And you see the market reacted to it a little bit. Then the market consolidated for a very long time. The market consolidated, it moved up a little bit, came down, took out liquidity, moved up, and then gold was just very moving sideways throughout this day. Gold did not have any direction, it was just moving in a zigzag form. But at last the market moved to the downside. So that was it for the two trades, the first two trades, which is on Monday and Tuesday. But then what happened during this trade is that I want to share something with you and you need to pay attention at this point. Now the thing with this strategy is this: if the market tap your entry, once the market has tapped your order block, there has to be a quick rejection from your order block in order to confirm that this trade is going to go in a direction. Okay, I'm going to explain that with a BTC trade and also a NASDAQ trade. Now if the market once the market has tapped your entry, there ought to be a quick rejection from there, or the market needs to come down a little bit before you see the rejection. So if the market is consolidating around your entry already, or the market is just falling down sharply without giving you any rejection, that is one of the signs for you to know that this zone might not actually hold. But that doesn't mean you close your entry. What you can do at this point is that if you have two positions, you can reduce the risk. You can reduce the risk on the trades. That is what you need to do, and that is exactly what I did here. Knowing that the market after this first tap rejection, the market coming back to my entry, what I did at this point was that I just reduced the lot size that I've already used in entering the trade. I reduced one in entering the trade. So I left one position risking $15, and then the other position I reduced the risk to about $7 to $8. Right? So when the market did hit my stop loss, I did not actually lose the whole $30 on this trade. And also I did not actually lose the whole $30 on this trade as well. So that is what I'm trying to say. Now let me move over to the BTC buy position. Now in the BTC buy position, this is exactly what I mean. This is a very good trade, but unfortunately the market did not tap my entry. Though I did take this trade, though this is a 13 weeks to the world trade. So my entry was still very down. My entry was resting in the body of this order block. Okay, that was where my entry was resting out. But then the market came, it almost tapped my entry, but then it reversed to the upside. But I did take the trade though. I did take the trade, but then I was risking less on the trade because the market has not tapped my entry. So I entered the trade with one position and I was risking less on that particular position. So you can see this is exactly the same thing I did here. We have our order block around this level. We have the change of character, the inducement. This is inducement close to this order block. That was why I picked this order block. And then the market tapped into this entry, though it did not tap the body of the order block. Let me go down to 5 minutes time frame. Though the market did not tap the body of the order block, you just tap into it and move to the upside. So you can see what I'm saying here. Since the market tap the order block, there ought to be a rejection from it in order for you to confirm it, right? So I risk less on this trade, then I head on to the trade till the market hits the 13 risk to reward. I think I was risking about $3 on the trade. On the first position, I risked $3 because I still had the other position left. I left the other position open in case the market come and tap in. I left the other limit order open in case the market come and tap in. So I entered one position and I was risking $3 and I head on to the position until the market gave me the 13 risk to reward. Okay? So this one take profit alone actually paid for those two losses I had. That is the important thing, right? So this trade actually paid for those two losses that I had. And assuming this trade actually tapped my entry, this would not only pay for those two losses, this will also pay for those 7 losses I've had in a row. This is the importance of having a good risk to reward. It's essentially important. And the way to have a good risk to reward is not really that difficult. All you just have to focus on is your entry. If you focus on your entry, then your stop loss is going to be small. And if your stop loss is small, you are going to cash the same amount of trades. I mean, if another person take this trade, this might be a 2 risk to reward. This might be a 3 risk to reward. The difference is basically the stop loss and the entry. Or mainly the difference is the entry point. Okay, some people might enter from here, some might enter from here. So where you enter the trade is very, very important. Your entry is essentially important. Okay. And also let me show you guys the profitable day that I've gotten. I've gotten 3 profitable days actually. I've gotten 3 profitable days. 2 profitable days rather, not 3. I've gotten 2 profitable days and I need 3 profitable days in actually for me to actually pass this profit. I mean, it's actually crazy to be honest. Let me just go in and let me show you guys. So you can see that I've gotten 2 profitable days. I need 3 profitable days left. Last week I was in drawdown, a little bit of drawdown, and this week I'm out of drawdown. So you can see that I've lost 7 trades in a row, but the account is still very, very much okay. Okay, it's because of the risk to reward. All right. So that is it for the weekly updates on the 5K account. And luckily for me, this week I actually had 1 profitable day to the 3 profitable days that are required for me to actually pass the account. So regardless of me making the 8% of the first of the phase one. I still need 3 profitable days. So I've actually made 2 profitable days. So I just had 1 profitable day left, right? And that is it. Also, this week's trade, sometimes we lose, sometimes we win, but more importantly is that we don't have to win every trade. You have to manage every outcome. And YouTube has become a place whereby I can literally document and save every of my video here, not just upload for you guys to watch, but I can save the video here and just come back a few years later and just see how I was doing back then. It's essentially important to me, right? So see you guys next week and stay blessed.